Malaysia's inflation eased in the October period, helped by a slower rise in food and energy prices. Inflation came in at 4% for last month, lower than the 4.5% in September. Price pressures have been easing since August. Earlier this month, Central Bank Governor Nur Syamsiah Mohd Yunus said Malaysia could see inflation remaining elevated amid both demand and cost pressures, but she does not expect a recession next year. Still, price pressures are weighing on Malaysians' wallets. The country's new Prime Minister, Anwar Ibrahim, has vowed to revive the economy struggling with high inflation. In his first press conference after assuming the top post, Anwar said the new government will not compromise on the issue of citizen welfare, which includes cost of living pressures. Taking a quick check on markets, the ringgit is picking up some momentum, knocking the mighty dollar further this hour. The Malaysian currency is stronger against the greenback, changing hands at 4.455 to the dollar. The stock benchmark index, though, on the back foot, with the KLCI hovering in negative territory since the day's start, at the moment losing 1.3% in trade. For more on the Malaysian economy and the growing need for the new government to pass a national budget, we're joined by Sailesh K. He's a group chief economist and head of market research at RHB Bank, joining us from KL today. Thank you so much, Sailesh, for coming on the show. Now, top on the agenda for the new PM after taking office is to pass the national budget for 2023, which will be a major test for Anwar Ibrahim and his capability and legitimacy in the new role. What do you think may unfold in the budget talk?
So, first of all, our timeline for the passage of the budget is over the next 1 to 2 months. It could potentially happen by end of January, with the risk that it could extend a little bit further in the future. And the key reason is that first, because it's a new administration, the cabinet needs to be formed, and as part of that cabinet, who the Minister of Finance is going to be, and the new administration will be looking at the details of the budget, quite a bit. What form the budget will take, we think it will still be on a path of fiscal consolidation, but the details will take some time to work out.
It will take some time now, but tabling and passing the national budget can test the resilience of the unity of the government. Do you see or foresee a different focus from Anwar Ibrahim's detractors in the parliament that could pose a challenge to the proposed budget?
Again, it really depends on what they negotiate of the deputy prime minister post, the respective posts related to the cabinet, especially Minister of Finance, how smoothly that goes. But at the end of the day, what will probably happen is a lot of the negotiations for these type of positions would have taken place ahead of time, such that when the budget is tabled, that each of the important line items are in broad agreements. There will definitely be challenges. There could be timing delays, but at the end of the day, we don't foresee, from a balance of risk perspective, some last-minute big, kind of hoo-ha that we don't agree or agree to disagree. That's kind of our sense. And the key message I'd like to give to your viewers is that Malaysia's commitment to fiscal consolidation, reduction of fuel subsidies, as well as trying to think about alternative measures in terms of the path of reducing debt to GDP is going to remain intact.
Sailesh, we just heard Malaysia's consumer inflation data. That eased in October to 4% on year. But life is not easy yet for Malaysians. With the new PM vowing to fix the cost of living crisis for Malaysians, can lower inflation be sustainable? What are the breakthroughs that Anwar might have at his disposal?
So the three main messages from looking at, I haven't looked at the details, I must admit, of the October inflation data point is that, keep in mind that the year-on-year is clearly contaminated by the base effect. If you look at the month-on-month print on the headline, it has accelerated, moderately to 0.2% from 0.1%. And the message that I would like to give you is that what the Bank Negara is focusing now is on core CPI and inflation, where the month-on-month momentum remains fairly elevated. The Bank Negara Malaysia, from our perspective, is thinking about the idea that this administration, you mentioned what is Anwar Ibrahim and his potentially new government thinking about, that the commitment to reduction of fuel subsidies will remain intact, and Bank Negara is considering that as well. And so have we. So in our inflation forecast for headline, we're at 3.4% this year and 3% next year. And already incorporating the idea that some sort of reduction of fuel subsidy will happen. On the OPR, we're out of consensus, where we think that the peak OPR rate, overnight policy rate, just to be clear for your viewers, which is the policy rate for Malaysia, will peak at 3 to 3.5%, with the balance of risk that we could hit 3.5% next year in the first half, and the balance of risk that the Bank Negara will be hiking at every meeting in the first half of next year.
Before we let you go, just very quickly, Sailesh, your outlook for the currency, which is critical to ensuring stable prices. What's the outlook for ringgit and investor sentiment on economic prospects going forward?
So for us, we published a note like around 7:30 p.m. last night or yesterday evening. And the view on the investing side is that we're overweight bonds, market weight equities, underweight cash. On the currency side, we're a little bit skeptical that this significant move down below 4.50 is going to be sustainable. Our year-end target is 4.6, and the first half of next year we're at 4.7 to 4.8. So there's been no major changes in our currency view.
Sailesh, thank you so much for your insight. Appreciate you joining with us today. Sailesh K, Group Chief Economist and Head of Financial Market Research at RHB Bank.